Hey everyone, welcome back to the channel. We have some huge news, some massive numbers coming out from Anthropic, which is extremely bullish for chip makers like Micron and SK Hynix stock. Check out the headline here. Anthropic eyes $2 trillion IPO valuation, and this is reportedly, allegedly, backed by insanely skyrocketing revenue. Sorry about that. So obviously we've been talking about a lot of the skepticism with the revenue continuing to grow. The market has been skeptical that AI spend can continue, and this is why, chip stocks like Micron and SK Hynix have contracted, but we continue to see evidence to the contrary, right? So we're going to talk about this, expectation, at least at the moment, that Anthropic's revenue continues to skyrocket. They're now expected to hit a run rate of $100 billion per year in revenue by the end of this year. We're going to talk about how that relates to the current numbers and what the numbers were, the last 6 months. So the trajectory here is massive. And of course, this would all create demand for the hardware, to power these AI chip stacks, right? Which of course, HBM memory is a massive part of that. Guys, please like, please subscribe. How are you guys doing in the market this week? Let me know in the comments, guys. I get like a couple thousand views per video, hardly any comments. Drop a comment. Let me know how you're doing this week. For the week, the S&P is doing pretty good. The market's up. CPI, inflation came in, cooler than expected. Oil prices are kind of ticking down, so things are relatively going well. My portfolio is up to all-time highs again, I believe, 1,200,000 and 220,000. All-time highs there, just about to hit 1.25 million. Let me know how you guys are doing this week. Again, if you guys want to see which stocks I'm buying, why I'm buying, and when, click the link below to join the private group. But the market for the day overall is doing pretty well. You see a lot of green here, especially in big tech. You see a lot of green, specifically in the semiconductors. NVIDIA was up 0.5%. AMD pretty much flat, but we had Micron up about 4.23%. So we got the chip stocks doing well. SK Hynix for the week is up a little over 16%, and Micron for the week so far, as of filming this video, is up 5%. So the stocks are doing really well. But what's going on with this $2 trillion valuation, right? So initially, I think they were reporting $1 trillion valuation. That is kind of crazy, but of course we saw SpaceX, I think, correct me if I'm wrong, but I think that IPO'd somewhere around like 1.7 trillion and then, rocketed up to like 2 point something before it came back down. But this would be the biggest IPO, right? And it's allegedly, and again, the numbers here are still not public, right? Because they're doing the IPO process. They filed their initial paperwork, but we still don't have the public listing showing their actual revenues publicly. But over time, we've noticed that the alleged revenue numbers end up being true. And essentially what they're seeing is in May, their annualized revenue was about 50 billion. So what does that mean? That means, for that quarter or that month, they brought in, let's say it's for the month, they brought in 4.5 billion, and that would give them an annualized run rate if you average that out for the whole year to about 47 billion. Well, now it's being reported that this last month, or at least, in May, they came out to an annualized run rate of 50 billion. Now the numbers currently in August are looking so strong that they're anticipating a run rate of 100 to 120 billion. So essentially doubling, a little over doubling from where they are now, right? And that is from 5xing from about 6 months ago, because I believe they ended 2025 with a run rate of about 5 or 6 billion, give or take, and now they're at 47 billion, estimated to be at 100 to 120 billion. So essentially revenues are skyrocketing, right? And this is obviously a bullish signal for, chip stocks like Micron and SK Hynix. You don't have to be a rocket scientist to understand that there's been a lot of skepticism around the concentration of these AI players, specifically OpenAI and Anthropic. And the risk there, because if either of these two companies slow down, demand could slow down, right? And one thing I want to address along those lines is that a lot of people are not understanding the fact that these two companies in the concentration is temporary. Yes, it is possible that, revenues could slow down, revenue growth, And obviously that could impact the forecast. But one thing that people aren't really taking into account is that really the hyperscalers are positioned to really drive long-term revenue growth for AI services, right? When you think about Anthropic having this massive revenue growth, the majority of their revenue is coming through hyperscaler cloud compute services, right? So they have their APIs, which allow enterprise customers to integrate Anthropic services directly into their own software, so they can access, data from the company securely and safely and quickly. And then they also have the chatbot Claude Code that's integrated into these cloud services like AWS, things like that, to provide, essentially the cloud providers are allowing Anthropic to grow their business by providing Anthropic services through the cloud, right? But when you think about it, the cloud providers essentially in the long term are going to integrate these features into their own cloud services, and it's essentially just going to be a feature of the cloud service, right? And for those of you that don't know much about the cloud, which if you're watching this video, you probably do, cloud services have an insane amount of features. I think they have like DNA sequencing features, like the amount of things you can do. Like let's say you have AWS, or if you have Azure, or you have Google Cloud Services. It's endless, right? And it becomes very sticky, right? So when you have an enterprise, like a multi-billion-dollar company that runs off a particular cloud service, at the moment you have Anthropic growing rapidly, those services being offered, seamlessly through the cloud services. And this is convenient for the hyperscalers at the moment, right? Because you have all the hyperscalers increasing cloud revenue because these AI services are increasing revenue because they are, selling AI services to these enterprise customers. Revenues are going up for the cloud services, for the hyperscalers, but Anthropic is running at a massive loss, right? Because actually providing the AI services themselves is not profitable. It's actually massively unprofitable, which is one of the bear cases for AI in general and for chip stocks, right? Like it's unsustainable, it's not going to work. But what the market isn't wrapping its head around is essentially hyperscalers like Microsoft, Amazon, Google. They are effectively using Anthropic and OpenAI to fund the unprofitable era of the AI build-out, right? Because revenues for the cloud is booming. That's coming up as massive profits because it runs through the cloud. The cloud providers take their cut. Anthropic's taking the massive loss. But what do you think is going to happen in the next 3, 4, 5, 6, 7, 8 years? Eventually, when they decide it makes sense at the moment, Microsoft, AWS, Google, they will begin competing more directly with Anthropic, right? So right now they have a symbiotic relationship. They're allowing Anthropic and OpenAI to run their services through their cloud services, really not competing with them, really helping them grow, which is also helping grow revenues for the cloud providers. But eventually, when the economics make sense, right? When they can actually make a profit or lose less money than Anthropic's currently losing, they're going to start making their own features more prominently offered, right? They're going to start competing more directly with Anthropic. They'll start, incentivizing their customers who are already in the ecosystem. The hyperscalers own the ecosystem. So once they start incentivizing their own customers to use their AI services, well, then they're going to increase their own AI service spend. And obviously that's going to be a massive death blow for Anthropic and OpenAI. So in the long term, personally, I expect Anthropic and OpenAI to essentially be cannibalized by the hyperscalers. Of course, they're doing their own thing to try and avoid that. But really, this is why I'm not worried so much about the concentration risk, right? So we see Anthropic, supposedly set to IPO at $2 trillion in the next few months. They have revenues skyrocketing. That is bullish for chip stocks, right? We will continue to sell chip stocks to fund this build out. And I'm not worried about the collapse of Anthropic because eventually that baton's going to be passed over to the hyperscalers, right? The hyperscalers are actually building out these data centers. They're going to own them. Anthropic and OpenAI are just renting them, right? So eventually we will, we do expect to see a diversification of the end use customers, right? Not just Anthropic and OpenAI, the hyperscalers, hopefully some mid-scale providers. And then obviously enterprise customers will continue to grow and grow. Anthropic is doing a great job of integrating Claude Code. Claude Code is massively popular. At the same time, they're also doing a great job with Claude Cowork, which is helping automate administrative tasks that are done in kind of like corporate level jobs, right? So revenue is growing, and this is a great proof of concept for hyperscalers, right? Because hyperscalers are looking at this revenue growth and seeing, you know what, we're going to take that revenue, right? We're not just going to always let Anthropic have this revenue. We're going to take this revenue for ourselves. So not only is this signaling to us as investors that, hey, chip stocks will continue to boom, it's probably a good investment, but it's also signaling to the hyperscalers, it's basically a proof of concept. Like, yes, building out these data centers is justified because the growth rate is completely insane. So let me know your thoughts on that in the comments below, guys. Just a quick update there. Insane. Now the expectation is $2 trillion for the IPO. Of course, that still has not been confirmed. We should get probably in the next month or so, if they do go for October, which is what we've been hearing. We should get some public numbers kind of confirming these things, but I will keep you posted as those things develop. Let me know your thoughts on that in the comments. But of course, the latest headline showing the insane revenue growth, again, up to, estimating $100 billion annualized run rate by the end of the year. That is an extremely bullish signal, as of course, all of these compute services run off the back of HBM, which Micron and SK Hynix provide. So let me know your thoughts in the comments, guys. Again, please like and subscribe, join that private group, and I'll see you guys on the next video.